What's up, guys? Welcome back to my channel. I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. This is Zoe. She wants to lay behind the desk today. But I thought today what I would do is give you kind of a look back in history at the Cromford Market Index, and we can talk a little bit about where we're at today, what it looks like from the past, and how we may be trending in the future. So let's jump in, and I'm going to share my screen and we'll just kind of walk through everything. So today, I think, is the first day we've gotten under 300. Now, let me back up for a second. If you are new to my channel or you don't know what the Cromford Market Index is, I'll explain. So I am a subscriber to a publication called the Cromford Report, which is a realtor subscription. And this company really analyzes data from the MLS and looks at everything going on in the MLS on a daily basis to give realtors a good indication of what's going on in the market. And they provide a ton of great data and information, charts and graphs that I use to educate my clients. And one of the things that they have is called the Cromford Market Index, or the CMI. It's a proprietary algorithm that helps us understand supply and demand factors in our market. And what you really need to know is that any number on this CMI between 90 to 110 means that we are in a normal range, and anything above 110 means that we are in a seller's market. Anything below 90 means that we're in a buyer's market. So there's your crash course on the CMI. But also, I do want to say they've been tracking this since the year 2001, and it has always been extremely accurate in being a predictor of price appreciation. So essentially, as long as that number is over 110, prices will continue to increase. Now, doesn't mean they're going to increase as much as they've been doing for the last 2 years. It could just mean that they are increasing a very small percentage every year. But they won't be decreasing as long as that number is over 110. So looking over here today, I think it's the first day we've gotten to below 300 on the CMI. And we're going to look back in history and see when we were back at this point in time, because since I've been talking about the CMI since the pandemic started, I'm pretty sure it's always been over 300, I want to say. It was shortly, probably in May of 2020 when I started really tracking this and talking about it on these videos. So it's been a very long time since I've had a number with a 2 in front of it. Now, they also have here our demand index, which means the demand in our market, and that the same things apply. So anywhere between 90 to 110 is normal, but you can see this is getting into the yellow here. So we're kind of starting to get closer towards the red, which means that demand is low. But we've been way above 100 for demand for a bit, so right now it feels like it's low even though it's in a normal range. Our supply index, this covers the or counts the inventory in our market, and as a side note, everything on the CMI is seasonally adjusted, so there is no excuse to say because we're going into summer X, Y, and Z. It's all seasonally adjusted based on the historical data that they have. So supply, we're at 32.6, which means that we're about 68% below normal for supply. So it's still extremely low, but it feels a little bit weird because this was like 22.6 not too long ago. So supply has really made some big increases. So let's look over here. I'm gonna bring up a different chart. So here's the supply and demand charted on the same graph. So the red is the demand, the blue is the supply, or purple, whatever you wanna call that. So you can see where we're at right now with our demand being, this is tracking at 102. It's not quite as updated, but that was not too long ago. And then our supply back when it was 26.5, but again, kind of very similar to where we're at today. And you can see I mentioned demand was up higher, 132. This was in January of 2021. Came down last summer, and then we shot back up at the end of last year for demand, and we were at 123. So we were 23% above normal for this demand, and now we're sitting around a normal range. And let's look at supply. So supply was extremely low Looks like kind of the lowest it's probably ever been, 22.8. Seems like that's the lowest I can get here. And then let's see, let's go back in time. Oh, well, that was 40. Yeah, that's not even quite as low as we've been here. So that's the lowest supply that we've had. Then we started to come back up last summer while our demand was coming down, came back down in supply, and now we're starting to tick up again. So the point that I wanted to show here is this yellow line here is normal, right? So look at how few times we've been normal with both supply and demand. A little bit back here in the early 2000s, and then definitely went a little crazy here. Obviously, that was the financial crisis. And then back again together here in kind of a normal range for a bit in 2014. And then we haven't really had that since. So what's interesting about the Phoenix market, and I've shared this in previous videos, but a normal market for Phoenix really is a seller's market. In the last 20 years, we've been in a seller's market for like 13 years total. And we've been in a buyer's market for, I think, 3 years, which was around here, and then a normal market for 4. I believe those were the stats. I'd have to double check. But I mean, when you think about that, like a normal feeling for us in this market is a seller's market. So let's talk about what happened here back in 2005, 6, 7, 8. So you can see what's interesting and really important to point out is we had a huge difference between supply and demand, but supply was high and demand was low. Okay, opposite situation than we have here. We've got high demand and low supply. So this was what caused prices to go down because we had an oversupply of homes and no one interested in purchasing them. So our demand index was at 58. So that's, it's 42% below normal-ish. And then our supply was at 214. So we're oversupplied by 214. That's insane. And so this is where prices, went down. And you can see leading up to this, we had a situation where our demand went really high, but this was false demand. We had a lot of people buying homes with no intention to live in them, and these really loose lending standards. And so all of this was really kind of inflated demand, and our supply appeared to be low because all these people were buying them, and then they decided they didn't want them, couldn't pay for them, whatever, selling all this off, and our supply shot up and our demand totally tanked, and so did home values. So although we've had like a lot of bold movement in the CMI in the last 2 months or so, this is very different, a very different scenario than what we saw back here. So I always like to look at this because it really helps us see, like, although things feel a little crazy right now on this chart, it's certainly not as crazy as this time. And it also shows us where we're at with our, in terms of being normal. So, although supply's been going up, look how low that line is. Like, we're still very much undersupplied in the Phoenix market. So all these builders building homes and people say we might overbuild. We got a long way to go to overbuild. And then with our demand, it's been above normal. It feels like everything has stopped because people don't want to pay these interest rates, but we're still in a normal range for demand. So I like to look at this. I thought that'd be a good visual to share historically with you guys. But this is cool too. So let's compare different years. So here's where we are today, which this looks horrific. Okay, so remember that is this. Okay, so it's not that bad, but it looks horrific when it's by itself. But let's just compare to 2019, right? Like the last normal year we had before the pandemic and everything went crazy. So in 2019, we ended the year with a CMI of 199. So we weren't even quite into the 200s yet. And we were in a seller's market in 2019. Now, homes did not get 20 offers and go over the list price by 30 grand, but we still had advantages for sellers versus buyers. We still had lower inventory than needed and not enough homes for everyone who wanted to buy them. So it was just a watered down version of where we're at today. And starting 2019, I mean, we were at 129, 130. This looks so low compared to where we've been, but I was around in 2019 and it was a good market. I mean, things move, sellers got good prices. You still had an advantage as a seller. As a buyer, you were still maybe not in the driver's seat, but you didn't have to waive every contingency in the book to be considered. I mean, that was a good thing. So, point being, if this continues to go here, it's not going to kill us. Now, we don't want this to go all the way down here, and I don't think it will, but you know, if we're going to come down and maybe coast around here, that was not a bad market. So, you know, let's look at 2018. Very similar, even lower than that towards the end of the year. So again, that was a really healthy seller's market. It wasn't insanely strong, but it was a seller's market. And then let's go back to 2014 because that was the last time we had a balanced market. So 2014, I'm going to take these off here. So 2014 is just chilling, man. Chilling at the bottom, 103, 105, you know, whatever. Nothing crazy going on. That looks okay, right? So if this turns into this, I think it's going to be all right. You know, there's just a lot of concern with everything that's gone on. Speaking of recessions, all of these different things that people talk about with concerns, but you know, if the housing market goes in this direction and we end up here, a balanced market might not be the worst thing. Now let's look at our favorite years, our crazy years of 2005, 6, and 7. Okay, so 2005, things started changing, right? Everything went down. We got all the way down to 86 on the CMI. 2006 got worse. We were all the way down to 46. Oof, 40, 39. So that's pretty low. And then 2007, we hung out there. 2008 started to tick up a little bit. 2009, we started to come back. And let's see, for 2009, we 124. Okay, so then we got back over that normal range and started to go into more of a seller's market again. As time went on, I think we went back into a little buyer's market for a bit, although, let's see. So bottom line, it's interesting to watch this happen and then see where we've been. Let's just add on, oh yeah, so there's the buyer's market that happened again. We went back down. Let's add on all these years, right? So 2018, 2019. Okay, 2019 things started breaking off from the norm. That's where you can see that. Then we had the pandemic and things went haywire. Then we rode that wave all last year. And here we are today, maybe just going back to a normal spot. I don't know. We'll see. Let's look at this visual too. So this blue line here is balance. So you can see all of this time that we've been in a seller's market way above this balance line. And the few times that we've been below, April of 14, March, April 2014, and then of course back in these years 05 to 08 and started coming out of that. Early 2000s, we were somewhere around balance too, but I mean, look how high we were, 502, April of 21. So about a year ago, that's when the CMI was, it seems like the highest it's ever recorded. And we were just setting records week after week. Things tapered off, things came back, and now they're tapering off. So it'll be interesting to see where the CMI goes from here, but as long as these bars do not go below this blue line, we can anticipate home values increasing and not decreasing. Now, again, that might be 1% per year. It may not be huge, but it's not going to be a decrease in your home value. So that's all I got today, guys. I just wanted to take you through these visuals because I know I talk about the CMI on my updates every Monday, and things have gotten a little crazy. And I think sometimes it's good to visualize where we've been in the past, where we've been recently, and where we may be heading. So I hope that's helpful. If you want to know what the CMI is in your city, you can click in the description below. I have a link to request that information and I will get that to you. And of course, if you're thinking about selling your home, I can help you with that. I do have a link for an instant home valuation that'll give you an indication of what it's worth, but I'd be happy to prepare a CMA if that's something you want some help with. So feel free to reach out to me anytime, call, text, or email. All my info's below. Thanks so much for coming here and watching this channel. And thank you to the Cromford Report for providing all this awesome information. Hope you guys have a great weekend, and I will see you on Monday with another market update.